Okay, in today's video, we're going to talk about setting up a set of rules for entering Forex trades. And this will result in no more random trade entries and more accurate trade entries and more profitable trade entries. And this is lesson 25 in our 35 lessons from ForexEarlyWarning.com. So most Forex traders use random trade entries. No real rules in place, and they use technical indicators too, and then they suffer the consequences. But we're going to give you a rules-based system that if you just demo trade these rules for a short period of time, maybe like 30 days or something, you'll think that you've gotten hold of something really good, and you'll believe that you can actually start making, in some cases, on some days, quite a few pips when the market is volatile. Using these trading rules. Let's get started with them immediately. So we start you off with a set of 5 basic rules for trade entries that you can use trade after trade. You can write these down on a piece of paper and hang them above your computer, and it'll just make sure you're following them. So trade in the direction of the primary trend on the higher time frames, at least the H4 time frame. Only enter trades when you have a lot of upside potential. So on a buy, then your next resistance should be at least 100 to 125 pips away. And on some of the highly volatile pairs, which you can find out more about here, let's say you're trading the pound Aussie or the pound New Zealand, one of the more volatile pairs of the 28 pairs we trade. You want to have at least 200 pips of upside potential. Now, Forex traders aren't used to dealing with these numbers. They're used to scalping with the smaller time frames. And number 3, make sure at least one consistently is strongly in your favor. For example, this live signaling system, the Forex Heatmap, is indicating that the euro is strong across the board. Okay, so if the euro is strong and consistent, the Canadian dollar and the USD probably had some slight weakness. And you got a real strong move here on the euro Canadian dollar. This isn't some 20 pip move. This is pretty big time movements here. You can see the scale. You can see how much it moved. Well over 100 pip move. Even if you only captured half of this move, you could have traded probably 3 different pairs. So the 50 to 100 pips just on one pair, but several euro pairs are really moving. Okay, so if the euro Canadian or euro yen is at least trending up on the H4 time frame, you got yourself a trade entry. 125 pips of movement in one trading session on just one pair. So this is a pretty good start on these rules. Next, trade only in the main Forex trading session. Do that, I would say, for at least 6 months. Then you can move to trading maybe in the Asian session or other times of day. You want to learn more about the main Forex trading session hours? Just click on that link. Rule 5 is just to demo trade first, then move to micro lot trading with stop orders, and then make sure you test this type of system out really well. You'll like it quite a bit, especially when the heat map signals are very strong and consistent. So it's 5 rules, and it works for 28 pairs in 8 different currencies. So 5 rules for entry. Now we're going to give you 3 rules for money management. Number 1, always trade with a stop order. Number 2, when your trade goes positive into positive pips, you know, a pretty good amount, plus 30 to 50 pips, just scale out half your lots and move your stop to break even. This is your basic rule of thumb for profit management. And don't enter a trade unless you can possibly get at least 3 pips of return for each pip you risk. So if your stop order is a 30 pip stop. You have to have, and you're looking to make at least 100 pips. That's 3.3 to 1 positive because 100 divided by 30. Now, one of these rules is based on the number of pips. This is based on the number of risk to reward ratio. 3 rules for money management, 5 rules for trade entry. Now, once you get some experience, there's a lot of different things that you can do. Maybe not really additional rules. Some of these are additional rules, but some of them are just slight modifications to the basic rules. One of them is trading in the Asian session. If you trade in the Asian session, make sure you have a brand new trend starting on one of these 3 time frames. A brand new trend means that our trend indicators, which you can find on our website, are starting a new cycle. This is the H4 time frame. So it's starting a new cycle. You can enter these types of trades in the Asian session. They occur a few times a month because you're at the beginning of the cycle, and this is really very forgiving to get you a lot more pips. So it's like an extra rule for trading in the Asian session. You use these on various currencies in the Asian session. Okay. Here we talk about trading around news drivers. Here we talk about if the market is choppy, what to do. We even have a full article on how to trade in a choppy market. Basically, you would either not trade or just trade less lots. So if you normally trade, let's say, 6 mini lots on a trade, you might only want to trade a couple of mini lots if the market conditions are choppy. And we'll give you the trend indicators so you can check the market for choppiness. Some ideas for experienced traders with at least 6 months experience. Trading reversals. We have another full article right here on trading reversals, how to identify, how to spot them. And then if the entire market is ranging but in fairly small ranges, it's okay to try to set shorter pip targets. Just realize that the risk is slightly higher, and that sometimes it's okay to reduce the threshold of larger time frames, maybe down to the H1 time frame. Sometimes the H1 time frame is ranging in very wide ranges on volatile pairs, a couple hundred pips. So sometimes you can look at the H1, and if it's starting a fresh movement cycle, similar to this picture here, it's okay to trade off the H1 also. So a lot of flexibility built into the system. You got 5 basic rules for trade entries, 3 rules for money management, and then a few optional rules for other situations or if you have more experience trading. So take the 5 basic rules and 3 rules for money management, and you'll start to see improvement. Then after you get about 6 months experience, you can start experimenting with the other situations we discussed as you get better with trading with these rules across 28 different pairs and 8 currencies. So this is rules-based Forex trading for accurate entries. And this is lesson 25 in our 35 lessons from forexearlywarning.com.